We're also watching oil prices, which are crawling back after hitting 17-month lows. Right now, U.S. crude just up about a half of 1%. Or actually, that's the 5-day, excuse me. But today, it's up about a half of 1%. Joining us now, SFG Alternative CIO Larry Shover from the CME. Larry, good to see you. So we have had this wild ride for oil. Do we get some stabilization going into the new year?
Well, I do, and I think the result of all this is really what happened in the last 3 months. I mean, it makes great headlines to say the last 5 days we've dropped 10%. The last 3 months we're down 34%. But on a year-on-year basis, oil's only down 17%. I mean, I take more issue with why it was trading up at $76 a barrel. I think people right now are overestimating shale, and they're also, to be frank, licking their wounds, just in a huge amount of losses that hedgers have taken, speculators have taken. And so that's why we see these very dramatic, volatile moves, but not a whole lot of liquidity. So to answer your question, yeah, I do think it'll consolidate. I'm very happy to find it below $50 a barrel.
Larry, you just said something I hadn't heard before. Help me understand. What did you mean by overestimating shale?
Yeah, like for years, people were underestimating shale, what shale could do, what its break-even point was, and the impact it would have on the global market. And now I think the opposite is beginning to be true, that they're overestimating what shale can actually do. I mean, we're a long way off from producing the numbers that some consensus believes. So that's what I'm talking about with overestimating the actual supply that they can produce.
Hey, Larry, let me ask you a question. You mentioned that high price, that $76. It will always amaze me that the price went up so high. Why was that? It didn't make any sense to me.
Yeah, no, it was painful for me because I've been short oil all year, and it was really just headline risk. I mean, it was supply fears of what was going to happen with OPEC compliance and with the sanctions on Iran and Libya, Venezuela, the production problems there, and it zoomed as we saw it to $76 in the beginning of October. All of a sudden, we realized that these headlines were not as bad as feared, and we went back to reality, back to where the price needs to be at this point.
All right, Larry Shover, CIO at SFG Alternatives, joining us from Chicago. Thank you so much.
We're going to take a brief break, but coming up, economic boom, why Main Street is having trouble filling stores. Here's a hint, and it's not Amazon's fault. Plus, break out your popcorn. The latest as Aquaman squares off with Mary Poppins at the holiday box office showdown.